Seth Cohen, how are you doing today, sir?
Good. How's it going, Shawn?
Great, great. I had a little bit of a technical difficulty. I apologize for that. It was supposed to be the theme music and intro first instead of us sitting on the live stream kind of looking at each other. So I apologize for that. But welcome to Lending with Purpose. We have some pretty great conversations with clients and friends. Information, resources that you never knew existed and wanted to learn more about. And so
Yep.
that's what we're doing here today, Seth. So welcome.
Thank you very much. I'm excited
Yeah,
to chat with you.
yeah, it's gonna be a great conversation. And so just real quick, as I was getting prepared for this, I always try to think of a story or did you know. This is kind of more or less Seth the same. It's a did you know that'll lead into probably a pretty cool conversation by us. But the first property that I ever purchased was a wow, it was a mobile home. It was a double wide mobile home. It
Hmm.
was on a permanent foundation. I think it was. I'm not sure. I can't even remember back. But it was an investment property that I owned. So my wife or girlfriend and I at the time we got engaged to be married, and we decided that we wanted to buy a new house. And so at the time, we were going to split the expenses. She was going to pay one part of the down payment. I was going to pay one part of the down payment. So I wasn't quite as frugal as she and saving my money. So I had to then go and tap the equity uh, on that particular property. To this day, Seth, I have no idea how I was able to get a home equity line of credit, a second mortgage on a mobile home.
Double wide.
So
Yes.
yeah, yeah. So maybe you can shed light on that. But it was an investment property, um, and it was crazy because I think this was like 2000 maybe or 2001 or
Mhm.
two. No, it was like 2002. And it was before I think all of the like stated income loans and things of that nature. I know for a fact it was a full doc loan because I provided all the documentation. But again, to this day, being in the business, I don't know how I was able to get that loan. But thank you for that because it did
Yes.
allow me to
It was
get the
not
money.
me, and I don't think we'll be doing that loan for you anytime soon.
And so 20 years ago, the
Yes.
company that was able to help me get that back then, I thank them a lot because it was, we were able to get our first house together, started a family in that house, and that catapulted us to be able to also help us to build some real estate, portfolio together and create some wealth and things of that nature. So I just kind of wanted to tell you that story, but also
Right.
more or less a did you know, and maybe we can weave that into our conversation. But Seth, with that said, tell us who you are, what you do, and then we'll get into our conversation today.
Sure. So I am Seth Cohen. I am the Chief Growth Officer at Nifty Door. We are a second mortgage, HELOC, fixed rate seconds. We have a first rate or first lien HELOC as well. We started about 8 months ago, where we started to make ourselves known to the public. The two founders of Nifty Door spent maybe a year working in stealth mode trying to create this technology that made it much more streamlined and easier for both the borrower and the loan officer to complete a process for uh, unlocking equity in their house. I've been in the business for about 24 years at this point. I can't seem to ever get out, which is what I think happens to a lot of people in the mortgage business. I started as an LO, had my own mortgage company. Unfortunately, it was in 2008, 2009, and I was I was in Michigan. And so when you talk about two things imploding at the same time, you think of the auto industry and the mortgage business. So I ended up not being an LO or having a mortgage company at that time, but have since taken on a number of different roles within the industry.
Good stuff. You have, we were talking earlier, you have a family too, right?
Yeah, and they've been through the wild ride with me throughout the years. And I have a 16-year-old daughter who, teenage daughters are always interesting. And then I've got an 11-year-old son as well. Been married to my wife we just had our 18-year anniversary this past weekend, actually.
Oh, that's awesome. Congratulations.
Thank you.
Congratulations. Yeah, yeah. So our kids are similar in age. They're about each side like 2 years apart.
Mm-hmm.
So I have a 13-year-old daughter
Yep.
and a 15-year-old son.
Oh,
Um,
nice.
yeah, yeah, yeah. So and I've been married. My wife and I we've been married for 19 years. Uh, last November.
Oh, nice. We are very similar here then.
Very similar. You sure it wasn't you that gave me that loan on
No,
that mobile home?
I've done a lot of wacky loans in my career, but that was not one of them. Um, someone I used to work with used to do 120% seconds, if you remember those.
Yeah,
I'm assuming if they did 120s, then maybe they were willing to put a second on a double wide at that point. There were some interesting loans back then.
yeah, definitely they were. So let's talk a little bit. We'll talk some about second mortgages, right? Because you mentioned in the unlocking home equity, and that's the title of this conversation today. And so home equity comes in many different ways, but we're seeing specifically nowadays because there's folks have tons of equity in their properties right
Yep.
now, and so there are ways that you can tap into that equity, um, and you and your company made it pretty quick and efficient in order to access it. But let's talk about like, what is a second mortgage, and then how can it provide some flexibility for homeowners in various situations like debt consolidation, like things like home improvements and funding and their educational expenses and such. And I'm sure you're going to talk more about it, but like what's a second mortgage, and what are some of the use cases?
Yeah, so we had a thesis that essentially over the past couple of years, everybody was refinancing their first. Everyone has, an interest rate 3% or below. And if you are staying in your home, you're not really going to want to touch that ever. And so rates were not going to go much lower, we thought. And so in a rising rate environment, if you have equity in your house and you want to do any of the things that you mentioned, whether it's consolidate debt, home improvements, instead of touching that first, it made a whole lot more sense to take out a home equity loan or a fixed rate second mortgage. Even though those come in at higher interest rates than your first, they're not going to be as large. And so, it just makes more sense. You're not touching, I have a rate below 3% on my house. I'm not going to touch that for as long as I live in my house. So if I wanted to do anything else, using that equity in my house and leveraging that to improve my life in any way, that I think I can or that I need to, is what I'm going to do through a second mortgage. The other thing is, without many homes on the market now,
Right.
you're not moving. So again, you're going to have that first mortgage with that great rate. So you're going to look for a different way to get it.
Right. And what are you seeing right now, like in regards to the type of you know uses for second mortgages? Does it run the gamut, and there's like a whole bunch of different ones, but are there certain types of sort of situations that people are using right now to do second mortgages?
Yeah, I think the two biggest, and then we could talk about some others. The two biggest are credit card consolidation. Um, when you hear about the Fed raising interest rates, you immediately go to, hey, mortgage interest rates are going up. But what you might not realize is that your credit card interest rates are also tied to that. So all of a sudden, your monthly payments are going up. And, you know, when you thought you might have had a 19% interest rate on your credit card, it's now going to be 24%. So to take the equity in your house, consolidate that into a rate that's single digits, that makes a whole lot more sense than continuing to pay interest on your credit card and not pay it down. The other thing, and I did this as well, is if you're looking for, you know, some way to improve your house, you know, you're looking for an addition on your kitchen or just to fix something up, you now have equity in your house that you can use to improve it. I don't know how many people that are going to watch this were like me, but I know during the pandemic, we were in our house for a year and all we did is look around and think about how much we hated certain things and wanted to
Right.
change things. And so the minute that we had the opportunity, we had the equity in our house, we decided, hey, I'm going to go for, you know, a HELOC, and I want to fix these things that are bothering me every day. So we're seeing that use case a lot as well. We have had other folks that have used their existing equity to get cash out to use as a down payment on a second home, on an investment property. It's a good way to save yourselves the effort of withdrawing cash from your bank, putting down a huge down payment. You can always just take equity from your house and use it for the purpose of acquiring another property.
That's awesome. Thanks for that. Yeah, definitely. I remember throughout the pandemic, obviously we were all very busy because of the rates and such. But so many
Yep.
people were buying houses because, you know, we were talking about this before we got started, like homeschooling, you know, so to
Mm-hmm.
speak, like, you know, virtual learning. And
Yep.
you're in a maybe a home in which you know you're gonna outgrow because you're looking at your kids and your kids are 8 years old, and then you think about, all right, if we have to go through this again, and now they're 12 and 16 and they're going to be too
Mm-hmm.
big for their rooms and too big for this house, we don't want to go through that again. And so yeah, I know that I during that time frame we got a bunch of cash out refinances too, because people were adding pools and, you know, doing renovations to their basements and stuff and things like that. So I could definitely see where that makes sense. We're we've been seeing, like, also like you mentioned, more or less like a bridge loan. Is that what you would call
Mm-hmm.
that? Like, you know, taking the money out to use it to purchase another property? Is that would you consider that a way to use it as a bridge?
Yeah, I mean, there's a bridge loan. Usually, you're taking money out of your house to buy another primary residence.
Hmm.
You know, if you're short, if you haven't yet sold your house, but you know you're getting cash for that sale, you can take out a loan on your existing house, use that to buy your new house, and then as soon as your initial house sells, you can pay that loan off. So that would be your typical bridge loan.
Yeah.
Um, for this, you know, we see customers who are saying, "Hey, I just want to get into the investment property business, but I don't have enough cash in the bank for a down payment. However, I'm sitting on 50% equity in my house. So why don't I use some of that 10, 20% and use it to buy an investment property that I can use, just like you mentioned in the very beginning, Shawn, to start building wealth."
Got it. So let's talk about, and it doesn't have to be specific to Nifty Door,
Mhm.
but like digital applications and like the approval process. It's always, you know, very important to simplify the process and expedite it for, you know, having a really good borrower experience.
Yep.
Um, and compared to like the traditional methods, like, you know, how do the digital applications and approval process, you know, why is that important?
Well, it's important for a couple reasons. You want your customers to be happy. You don't want them to go through a process where they're uncertain what's going on with their loan. They're looking through old financials trying to send them in. They're constantly getting asked for new documentation. And then they're just sitting and waiting to hear what's going on. And, you know, in 2020, 2021, files took a little longer. And, if you go to a bank or a credit union, you submit your information, and 45, 60 days later, you may know what your decision is. So from a customer perspective, you're really looking for that streamlined experience. You're also thinking about who your audience is. And at this point, most people are used to doing everything online. And so when it comes to getting a mortgage, so a digital application, a digital process to verify income, a digital process to determine property value, it saves your borrowers the stress and headaches of the time spent to gather documents and the uncertainty. On the other side of things, you look at what it takes to originate a first mortgage. I think the MBA came out with their stat that it costs $12,800 now to originate a first mortgage. And so when you're the owner of a mortgage company and you have to pay your LO comp, your processors, your underwriters, capital markets, all of the other operations involved, there's got to be a better way. And that's where digital comes in. That's where technology comes in. And so that's really what we're all about here, is making the process easier, cleaner, and just smoother with more certainty. That's the whole point of technology.
Got it. And so before we get into Nifty Door, the last question around sort of the nuts and bolts, so to speak, of second mortgages, like what types of second mortgages are they? So when we say, like, for instance, we were working with a client the other day and we said second mortgage, and she's like, what, a second mortgage? Like, yep. What does that mean? I just want a HELOC.
Yeah.
And I'm just like, well, that is a second mortgage because, I said, you do have a first mortgage, right? One that it's your main loan. It's a big chunk and you pay this one payment. And I was, like, who's your lender? And then she told me, and I was like, well, think about it. In theory, it is a second mortgage because you're putting it on top of or behind your larger loan that you currently have. And so like, there's like, how many, types of second mortgages are there? Or I should say, what types of second mortgages are there? I mentioned HELOC, but like, I know there's HELoan and stuff like that, but could you break that down for us?
Yeah. So it's funny, when I started here, we only offered fixed rate seconds, and those are called HELoans. Now, I've been in the business for a very long time, and I don't think I'd ever called a second mortgage a HELoan. Yes. So it took some explaining to do. So, a HELoan is essentially a fixed rate second mortgage. And when you take out a fixed rate second mortgage, you have significantly higher regulatory guidelines to follow. You have to follow all of the TRID compliance. You have to follow the timelines that come in with your loan estimate and your CDs. So that's really one of the second mortgage types. The other is the HELOC, and that's the more common verbiage that people use. As you mentioned, I mean, people don't often say second mortgage. They basically say, I'm looking for a HELOC or a home equity line of credit. That's what you hear, right? So when I was offering a HELoan and talking about it with you and other mortgage company owners, they're like, look, I don't know what that is. And I'm like, I didn't either. So it was always funny to me. And it's a fixed rate second. HELOCs are almost like a credit card where you have a line of credit. You can use it when you need it. You only pay interest on the amount that you've drawn against your line. So it's it's more use it as you need it, as opposed to a lump sum, which is what your fixed rate second is.
Got it. Thanks for that. That's it's a good explanation. But yeah, I just want a HELOC, Seth. That's all I want. That's exactly what you said to me.
Yep.
So look, let's get into Nifty Door, because I think it's pretty unique what you all are doing, and it is extremely fast. It makes a lot of sense, and it's very easy to go through your process. And so, like, explain, Nifty Door's role in the industry. and how the digital process works and how it sets you apart from other lenders, and in regards to approval and closing times. Like, tell us about Nifty Door.
Sure. So again, we were talking before about what does digital transformation mean and why is it important? And so when you looked at the banks and the credit unions, they took a very long time to process these loans. And so our main goal was to cut that time dramatically. And at the same time, empower our lending partners to keep their customers for life. It is your customer, your brand, your logo that's going to be front and center from the very beginning all the way through to the end. We're not going out to borrowers directly. We're here to help you guys. So essentially, Nifty Door, the borrower gets an application from an LO. It's a unique application for each LO. It shows the LO's picture, their NMLS ID. Borrower goes through very simple questions: name, address, social security number, or not social security number, name, address. What's your credit score that you think it might be? Are you W-2 or self-employed? And how much money do you make? And if that fits within what we want to lend on, we will give them an instant offer. After we give them an instant offer, we go through a whole series of digital verifications, whether it's KYC, credit reports, property value, property title reports, and property legal investing, as well as digitally verify income. That process, the quickest we've done it for a borrower is 26 minutes from start to finish, from application to clear to close. And the only reason it took 26 minutes is the property report took about 20 minutes to come back. So while that was going on, they did the income, they did the disclosures. Now, that is not to say every loan takes 26 minutes, but we really are all about speed and efficiency and making it the best customer experience possible. And then the cool thing is, not only do we close the loan digitally, so borrowers can close from the comfort of their home. They just log in, a notary pops up on their screen. They do it on their cell phone. It takes about 10 to 15 minutes. They don't have to welcome anyone to their house and clear some room on their dining room table. This is all done from the comfort where they want to do it. We had a couple who, closed their loan at 6 a.m. laying in bed. We had a police officer who was on a 15-minute break and did his loan closing while he was in his cop car. So it's really, again, it's all about a unique, fantastic borrower experience. But from our lending partner standpoint, we not only keep your logo front and center throughout the whole origination side of it, but we've developed our own servicing platform. And so we don't use a sub-servicer. We do all of it ourselves. And when a borrower goes in to make a payment, they will see your logo front and center. They'll know that you guys were the ones who originally gave it to them, and they'll come back to you at some point in the future.
It's awesome. And so, like, in regards to competition and keeping competitive rates and such, I think some banks and credit unions offer these products, these HELOCs and HELoans, and or I should say second mortgages. How do you remain competitive when you're working with clients in that manner?
So we use the analogy of people who want to go to the grocery store or use Uber Eats or Instacart. You can go to the grocery store, spend a lot of time. You'll probably get it cheaper than using Instacart. But, there's a time factor of money here, right? So how much time do you want to spend on this thing? We are not going to beat banks. We are not going to beat credit unions. But what we are is much more flexible. We have our own underwriting guidelines. We're here to make the deal work as opposed to just trying to say yes or no. And essentially, if you think about it, banks and credit unions, subsidize their interest rates to try and bring in more customers. Now, they will always have the best rates. They're now starting to get a little bit hurt with the rise in interest rates and how that's impacting their lower interest rate original HELOCs from a couple of years ago, which now are valued at much less than what they are now. So banks and credit unions have also been increasing their rates a little bit if you check them out. But when it comes to the competitors in our space that are not FDIC insured or part of the credit union space, our rates are right there, very competitive, and we just think our process is so much easier for everyone.
Yeah. Thanks for that. So the other thing is security. So like, how do like digital mortgage lenders like yourself, protect the consumer with security and like privacy of your personal and financial information during this like online process and application process?
Yeah, sorry, my dog's barking in the background. But
Yeah, I was
anyway,
gonna ask if you had a dog beforehand. Like,
yes, I
like
do.
you have the perfect family. You have a wife,
Yes, with two
two
dogs as
kids,
well.
and a dog. Oh wow.
Yeah, we have
Okay.
2 dogs. It's a full house. So when you think about verification and the security of information, from the lender's perspective, what you're getting is information that's been digitally, electronically verified from the true sources. You don't have to rely on paper documentation, anything that can be manipulated by a borrower. So there's the security aspect from the lender's perspective. From the borrower's perspective, your documentation is not floating around out there. It's not in someone's system. It's not just in a file folder at a mortgage company that can get lost, that can get taken. This is all stored through the utmost safest security systems that you can have within technology.
Understood. Thank you. And so the last question around this is like Nifty Door. I have to believe like so a lot of tech companies, because you're a tech company that does second mortgages very well, right?
Yes.
And have built some pretty amazing tech around it. But like I know that I'm sure you leverage like data and analytics to like better understand and serve your clients. Am I correct in assuming that like the better data you get, the more information you get, the better your process becomes, the easier it is to service your clients? Do you all think that way when you've been building this out?
Yeah, so actually the 2 co-founders of the company, right before they started Nifty Door, sold their previous company. And what that company did was just mine as much data as possible for the real estate industry. It served over 60 multiple listing services and over 1.2 million real estate agents. And they could essentially pull up almost every bit of information from a property, the homeowner contact information. And it was really this whole system of just understanding the information that was out there. From our system, what we've done is we've built connections into the leading data providers, whether it's Experian, just the AVM we use Plaid to verify income. All of this information comes into us. And when one of our lender partners comes to us and says, hey, can you just take a look at certain things, see if there's an opportunity for this group of borrowers that we have in our system? What are your thoughts in terms of is this the right target for us to market the HELOC product to? We can help analyze the information. We can help come up with a strategy. But again, when you look at who the right target audience is, it's almost everyone you've done a loan for in the past couple of years. And I'm sure you've been getting calls, I need to take cash out. What would the interest rate be? And it's hard for an LO to say, yeah, you have a 2.5 on your first. We can give you $50,000 or $100,000 cash out, and your new interest rate is going to be 6.5%. It just doesn't feel great to try and sell that. but now you have the opportunity to provide them with, that availability of funds, with a great process, satisfy your customer, and still save them and keep them for future business.
That's awesome. That's good information. And so, Seth, this has been great. I don't have much more to ask because I want to be conscious of your time, and you've been generous with pulling this together for us. I just felt like it was needed because we're having tons of conversations with people now because things cost more with inflation and such, like cost more to buy groceries. We were overpaying for cars and such, things of that nature. Just everything's costing more. And so many people are using their credit cards now,
Yep.
and they're running them up. And so we're having conversations around, how do we consolidate our debt? And so it's a really tough thing. Like, it could benefit us to tell you to do a cash out refinance on your house, but like, is that the right thing to do? And like you mentioned, you have a 2 or a 3 on your rate for a long term on a large sum of money, and we can, in our consciously be able to give someone a second mortgage on a smaller amount that will benefit them. That's just the right thing to do. And so we're always looking to find ways to help our clients as best as we possibly can, and kind of do it the right way. And then when we found out that you all had the solution and it actually works, like it really works, it's just been a good thing. Wish you all the best, and hope you continue to help people as much as you can. But before we wrap up, I have a few other things to ask you, and then I'll let you go.
Sure.
So how can we help you? Like, what do you need out there? Like, for everybody that's listening, how can we help you?
I appreciate that. It's almost more at this point, how can we help you guys? Right? Like, we understand the business is incredibly tough right now. I think I saw at one point that there were only 150,000 or 200,000 borrowers remaining that were refi eligible. And so if you think about the fact that there are 50 or 75,000 LOs, they're all chasing those customers. So our goal is to help you guys provide your customers with an alternative that really helps them out and makes a difference. And so that was really the decision behind this, in a way that really it's a win-win for everyone. When you provide us with loans, obviously that's great for us, but at the same point, we want the borrower to have such a great experience. They'll remember you, Shawn, you did this. And when rates come down a little bit and they want to consolidate their first and second mortgage, and be like, Shawn, that process was awesome for my second. Let's just go right back to it.
Yeah. And so how do we connect with Nifty Door? I know we offer your services and we have a unique URL, but like, how does one get more information about Nifty Door or connect with you to become a partner?
Yeah, and so they can always go to niftydoor.com and request information. They can email me, Seth@niftydoor.com. They can go on my LinkedIn. They could go on Nifty Door's LinkedIn. Whatever's the easiest way for them. We're here to respond to them and see how we can provide their assistance with them, and hopefully partner. Our goal is to partner with as many lenders as possible, not to just go out there and make a lot of money. That's not the goal. The goal is to transform the industry with our technology.
That's awesome. So, ladies and gentlemen, if you're listening, reach out to Fortis Mortgage directly if you're looking to get a second loan. For all of my colleagues and friends out there that are lenders and brokers, please reach out to Seth directly. Seth made it very, very, very simple for us to get approved with Nifty Door, and it was a very easy lift as well to get access and get set up to their systems. We've run a few applications through there already, but just be sure to reach out to Seth to become a partner also. All right, so Seth, we are going to wrap it up with a question. I put it on the content brief. I hope you're prepared for it.
Yeah, I
But
saw that and I forgot about it, so I'm not sure.
yeah, yeah.
Yeah.
And so back in the day, I told you about kind of how we got started with this. So I don't know, well over 100 interviews. And so before, I wouldn't tell people, and it was just like, kind of a surprise, like the last question. And then I
Yeah.
got a conscious and was like, I should probably start telling people what this last question is. So you get one
I
person.
forgot about it, Shawn.
Hey, it's you could think of one person. So you get one person, one question. Who would it be, and what would you ask? One person, one question. Who would it be? What would you ask? There's no wrong answer. Just
Yeah, no, I get it. And I'm trying to think of how far back in history I would go. To me, I'm a huge baseball fan. So, I would probably go back and ask Babe Ruth. Just, I don't know if I would have a single question for him, but I would just want to talk to him about what it was like to play back then. We're seeing it with Shohei Ohtani right now, pitching and hitting at the same time. I would just love to talk to him about what it was like to play baseball back then.
I would probably ask him what gave him the audacity to point.
That's true. That's true. And was he drunk when he did that? That's the rumor.
What in the rumor he used to like drink and smoke cigarettes and then just go up and hit home runs. He's left-handed, right?
Yep.
Okay.
Yes.
and so that was that's like one of your favorite players, like all time?
Yeah, actually, spring break is coming up for my kids, and I'm probably going to spend a couple days taking my son up to Cooperstown Hall of Fame.
Wow.
Spend some time there. Just go enjoy it.
And how do you feel about this world championship that just happened? Did it break your heart?
Well, I am a huge
good game, right?
Yeah, I'm a huge Phillies fan. I was raised outside of Philadelphia, so we've had some heartbreak this year between the Super Bowl and the World Series. But to see Trey Turner do as well as he did, he's a new Philly. Honestly, it was so exciting. I thought this was awesome. I don't think I paid attention to the World Baseball Classic last time, and you could not have asked for a better matchup at the end. So
yeah.
It was fun. It wasn't like I was specific to one country. I love watching good baseball.
Yeah. No, that's awesome. So everyone, I say it every week, it'd be such a shame to have resources and contacts, connections like Seth in the network and not share them. If there's anything whatsoever, anything that we can do to help you in any way, please don't hesitate to reach out. Everyone, please remain as safe and as healthy as you possibly can. And I think we'll be back here next week. Yeah, we'll definitely have someone back next week. And Seth, I'd ask you to just hang on with me for another minute. And
Sure.
after we close out, but thank you for your time today. It was a great conversation,
Awesome.
a lot of great information, and I just appreciate the fact that your company is offering a great resource to be able to help our clients during this time. And it's just a great thing. And thank you for that.
Awesome. Thanks, Shawn. This was great.